Ladies and gentlemen, welcome back to the freaking channel. I hope you guys are ready for a jam-packed, volatile, yet exciting trading week upcoming. Lots of data. We get Fed Jerome Powell twice. We have non-farm payrolls, AI earnings that will be very important for the markets, and a bunch of other things happening as well that you need to know. I will also give you an overview of what this week ahead could look like for Tesla stock, how option positioning is, and whether or not we will stay above $200 per share. Hit the like button and subscribe to the channel because it is free 99. It costs you absolutely nothing to do so, and that's pretty rare these days. It seems like nothing is free. I guess one of the strangest things about this week is we have a lot of very important things happening. So I can't pick out just one major event that can be the end all be all for this week. I mean, there's so many different things that could have a big impact to our markets. Let me know down below in the comment section what you think will be the biggest catalyst for this week ahead, and whether you think it's bullish or bearish, whether it's going to bring down markets or send stocks even higher. Keep in mind, the S&P 500 has been green for the week 16 out of the last 18 weeks. The last time this happened was 1971. So odds are, if you're watching this video, this is the first time you have seen this at the bare minimum in your investment lifetime. This is also at a time where apparently the price action is bullish in markets. Stocks continue to go higher, at least the S&P and the NASDAQ index, while positioning is bearish, and most defensive it has been since 2008's great financial crisis. That is according to Bank of America. And we can see this by more capital going into defensives as of lately, like healthcare, utilities, and consumer staples, companies that will weather any storm that is thrown at the economy, whereas cyclicals include consumer discretionary, energy, tech, industrials, and materials. They have been seeing less allocation from hedge funds and institutions. Now, I would say tech is more defensive these days than cyclical, but still, there is some pretty negative, I guess, positioning out. Which, let's also be honest with ourselves, the big tech, magnificent six, if you will, they have a lot of bullish positioning. They have way too much bullish positioning, in my personal opinion. Everything else in the markets, they're not nearly as bullishly positioned in. Another crazy statistic here is Nvidia has accounted for 26.3% of the S&P 500's year-to-date gain, adding 92 index points, so almost 1% to the year-to-date gain so far. Meta has contributed about 0.4% to the upside, Amazon about 0.27%, Nvidia definitely the leader here, about 0.92%. Apple has cost the S&P 500 about negative 0.23%. Microsoft, which is actually surprising, has only added about 0.33% to the S&P so far this year. Tesla, my baby, my child, is down about 16 basis points of a drag on the S&P 500 so far this year. That brings us into the first major event of this week. Now, this is not going in chronological order. We'll do that a little bit later when we look at the earnings calendar. Economic calendar. These earnings, the ones that are important to the markets, are going to be later in the week, but I figure we should talk about this now since we just went over kind of the addition to the S&P 500's gain that you have seen from AI stocks. It has been outsized so far to start 2024, and that's because money continues to flow into these AI stocks. Monday and after hours, you are going to have GitLab. That's expected to move huge, and we'll look at expectations here in just a moment. But Tuesday morning, you're going to have NEO and Target. Tuesday and after hours, CrowdStrike and ChargePoint, as well as Ross and Nordstrom. Now, these companies can be important. CrowdStrike can be important. Target, very interesting stock that I want to potentially make a trade on. Check that link out down below in the description of this video for the trading community. Nonetheless, Wednesday pre-market, JD.com, Abercrombie & Fitch, Foot Locker, EVgo, Campbell's Soup, and that's pretty much it. Wednesday, after hours, nothing too crazy. You do have Victoria's Secret and Honest if those are your kind of companies. Thursday pre-market, Kroger, Big Lots, Burlington, American Eagle Outfitters, Billy Buy, PaySafe. It's actually Thursday and after hours where all of the action will be and could be for the broader markets. Broadcom. Oh my gosh, what a stock Broadcom has been. They are a semiconductor company. They are grouped into the AI trade. Now, they have seen their earnings explode, so they're already benefiting from this recent round of AI. Broadcom was up like 7% on Friday, so they've definitely started to see this pre-earnings rally. If Broadcom sours the mood on earnings and falls, that's going to have a direct impact to NVIDIA, AMD, SMCI, ARM, Microsoft, all of your deemed AI stocks. Costco, high-flying retailer stock. I mean, that stock's done very well. I'm looking at targeting both of these two stocks potentially for the downside in the options market for their earnings. I have a very specific strategy, so just be very careful. Don't listen or trade anything that I say. You will lose money. We'll also have Marvell, which is grouped in that AI trade as well. Not as much so as Broadcom. Broadcom's going to be the big one that could really move NVIDIA and SMCI and all these other stocks in sympathy, but Marvell can do the exact same thing. So I wouldn't count that one out as well. I've hit some very big trades on Marvell in the past, but I don't think there's much of a trade on Marvell this time around. You will also have MongoDB, DocuSign, Samsara, Petrobras, Gap, and Runway. And then Friday pre-market, really nothing notable. Now, here are the expected moves of your top earnings this week. I only like 3 of these stocks for potential trades. The reason for this is if you're trading options for earnings, whatever's priced in, if you don't get a move that is much larger than whatever this is pricing in, you're not going to make money. You're going to lose money. Depending on how much time you get, all those things are factored in. But let's say GitLab pricing in 16%, that thing's got to move like 30% for you to make any kind of sizable return on the options because it's just pricing in too much. Same thing for Neo, CrowdStrike, Abercrombie and Fitch, Gap, Marvel, they're all pricing in 12+%. DocuSign, Burlington, Toro, THO, JD.com, don't like those either. There's only really like 7 or so stocks that make sense to even trade on earnings, but I like these 3. Target for a potential upside move, Avgo, Broadcom for a potential downside move, and Costco also for a potential downside move. Costco's only pricing in 4%, so if Costco moves 10%, that could be a big winner. 15, even bigger. 20% move, I mean, you could be looking at some big money there. Broadcom, same thing. They're pricing in about 7%. They could easily move 10, 15, 20% on good or bad earnings. And Target historically can move 20+% on good and or bad earnings. So I do think the AI trade will be in focus this week, and if Broadcom or Marvel drop the ball on Thursday, that's gonna be a bit of a problem heading into not this week, but the following week on Tuesday when you get the ARM lockup expiration on March 12th. Let me know down below in the comment section if you think Broadcom or Marvell are going to have good or bad earnings. Because as we just went over with the chart, I mean, NVIDIA is by far the biggest add to the S&P 500's year-to-date gain. If that AI trade starts to give up a little bit here, that's not going to be great for the indexes. Thus, that probably would not be good for Tesla stock either. Now into your economic data for this week. Monday, you're not going to have much. You are going to have Fed Harker. Fed Harker could be important if Powell's going to change his stance or he's going to say something different, give us good or bad news on Wednesday and Thursday. Maybe Harker does give us a heads up on that on Tuesday or on Monday. Maybe even Fed Bar on Tuesday, but he's more bank regulatory guy. He's the supervision of the banking regulation division of the Fed. So he usually doesn't speak economic policies too much or monetary policies too much, but that's also a possibility that he could give us a heads up on what Powell's going to say. Now on Tuesday, your first round of important economic data, which is the ISM Services PMI, will be coming out. Expected a little bit lower than last month. Last month you were at 53.4. That's expected to be 52.5 on Tuesday. And that's it for your Tuesday. For Wednesday, Fed Jerome Powell will be testifying in front of the Senate. I believe if we're going to get news from Powell, new information, it's probably going to be on Wednesday. And then Thursday is probably, could you get new information on Thursday? Yeah, but you're probably going to get it on Wednesday, if anything. You are also going to get JOLTS job openings, higher job openings. The markets deem as bad news because that means more businesses are trying to hire. I think the higher the job openings are, the better, right? You want to see businesses looking to hire people. If you see a sharp drop here, that could be seen as good news for the markets, but keep in mind a sharp drop to JOLTS job openings happens before you go into a recession. So you just want to see how much that drop is. We're expecting a drop of about 100,000 job ads. This data is for January. Typically, you do see January as the month a lot of companies start to get rid of their seasonal workers. So we'll see if that kind of lines up with a larger drop in JOLTS job openings or not. You're going to get Fed Daily that speaks at noon on Wednesday, and that's going to do it for your Wednesday. Thursday, you will get, Wednesday you will actually get the ADP employment change as well. This is the closest thing related to the non-farm payrolls report. This is for the month of February. Last month you came in at 107,000 job ads for the month. You're expecting 145,000 for February. So you're actually expecting a larger number from January to February, which is interesting. And then on Thursday, you're going to get Fed Jerome Powell's testimony again. Again, I don't think we're going to get new information here. Could we? It's always a possibility, but usually if we're going to get new information, Powell tends to start off with that. He tends to really give us the bad news first. Friday is your biggest economic data of this week, whereas you will get your non-farm payroll report. Now, last month, you've seen 353,000 job ads. You're expecting for the month of February 190,000 job ads, and we will see what the revisions look like. We're going to get revisions for last month's number and the number before that. Last month, you've seen upward revisions of like 100,000 job ads for the last 2 months. Insane upward revision that you've seen. I don't think we're going to get an upside revision because then you could be breaking above 400,000 job ads for last month, for the month of January. Could you see a downward revision here? Potentially. And that would maybe be, again, good news for the markets. But remember, it's never good news if you see less jobs created. In, I guess, the longer term sense, give it 6 months, right? You always want to see more jobs created than not. But you are expecting 190,000 non-farm payrolls for your number on Friday. And the unemployment rate is expected to be 3.7%, the same as last month. A big jump in the unemployment rate, probably not good. Tends to be very recessionary. But, plus or minus 0.1, probably not going to be a big deal. So that is your setup this week for the earnings as well as the economic data. I don't know if the non-farm payrolls are going to be the biggest mover for this week. I don't know if Broadcom and Marvel are going to be the biggest movers for this week, or if Jerome Powell on Wednesday are going to be the biggest movers for this week. You gotta as well mention ISM Services PMI, although that will give you a move for Tuesday. It's not going to be the biggest event for this week. Very important, but just not the biggest event. I don't know. From Wednesday, Thursday, Friday, you could get big moves in our markets. Considering the S&P 500 is at all-time highs, you did fall about $1 or so in after hours on the S&P. On Friday, you were down about 0.17% in after hours. Maybe that sets us up for a down Monday. Again, we'll have to see. This is very, I guess, if you will, historic for any market to be this bullish. And you can just see how many green weeks we have seen when you pull this up to a weekly candlestick chart. Even when the Fed was buying bonds and doing quantitative easing, even when we were seeing massive money printing and there was all of the right reasons in the world to own stocks, it was a no-brainer, right? You wanted to own stocks when rates were low, QT was happening, and the government was giving out stimulus checks. How can that be bad for corporate earnings? I don't think it can be. You had more volatility then, and the markets pretty much went straight up as well. You had more volatility, way more volatility in 2020 and 2021 than you have seen in the last 18 weeks. A lot more green candles in the last 18 weeks than these weeks over here. So you want to be a little bit careful here because the markets do look what I would call top heavy with the concentration in a lot of your magnificent 6 stocks, if you will. I think Tesla's the best one of all of them, definitely with the best risk to reward by a long shot. But could you be due for a pullback here? I would argue we've been due for a pullback for a while. Now, here in the options market, expiring this Friday for Tesla stock, you have 56.4% open interest to the call side, 43.6% open interest to the put side. Now, on Friday, you had 60% positive order value from hedge funds and institutions in the options market, totaling $329.63 million. So quite a bit of activity was taking place in the options market to the positive side for Tesla stock in this upcoming week. Now, if you look at the largest strikes for open interest, that would be 205, the 205 call, 96,000 for volume on Friday, 12,000 for open interest. The 220 call had 18,000 for volume on Friday with 14,000 for open interest. And the largest open interest strike of them all is the 210 call, where you had 46,000 for volume and about 19,000 for open interest. So we'll see. Last week, there was a lot of activity around the $200 call. A lot of options that do expire on Friday, that expire in the money. A lot of that closing out final activity does not get done actually until Monday. There is the T+2 settlement time, so options do not settle the same day. So the back end of all of those options that you've seen expire in the money at the $200 call specifically. It was like 60,000 or so. A lot of that buying activity could take place in the beginning of this upcoming week, which 60,000 for open interest equals about 6 million shares that market makers or these option buyers are going to have to go ahead and take delivery of. So that could cause some bullish pressure on Tesla stock here in the beginning of this week. And again, I think it's one of those scenarios where the beginning of the week could look a little bit better than the ending of the week. I talked about that in last week's video as well, and we had a very strong start to the week for Tesla stock, and then you kind of did nothing throughout the end of the week. You did dip down on Thursday and on Friday, but then you ended up retracing towards the high. So we were kind of right about last week in the sense of, you know, I wasn't expecting much upside. I wasn't really expecting much downside. Now we are in this channel, some would call a bear flag, which means we may break down to the downside. If that happens, I think it is Wednesday, Thursday, or Friday when that does happen. Do I think we're going to be in for a full-blown crash? Not unless we get new information, really good or really bad economic data, or we get Broadcom or Marvel that completely whiff on earnings and the AI trade becomes in question, then you could see some larger downside. And odds are, out of those 3 events, something could surprise to the downside. So I think statistically looking at these things, if there's 3 major catalysts that could give you large downside in the markets, 3 different events, not including ISM services PMI, which can be a big event as well. Odds are at least one of those gives you some kind of downside. So Wednesday, Thursday, Friday, I'm expecting some kind of bad, disappointing news. Now, if we don't, for whatever reason, statistically get that bad news, which we're most likely to get, then if Tesla stock can break above about 207, you're going to break above this ascending level of resistance, this upward bound of the channel. If that happens, you could break above 210, and then you're really in no man's land to the upside. Above 210, you want to watch $212.57, and then you're going to run into the low 20s where you meet your 100-day moving average at $222 per share. And let's also be honest, the sentiment is so bad around Tesla stock. People are so bearish that I think any bit of good news here, people can really run with it. Now, on any kind of just normal kind of downside week, maybe Powell says something the markets don't like, maybe he says they might not cut in 2024, then you could see Tesla stock fall back to the low 190s. That would be my expectation this week. That, would coincide with, the recognition of this bear flag and a decent amount of downside down to the 190s. If we don't get any bad news, the AI trade stays intact. If Powell gives us reason to broaden out the markets, maybe rate cuts coming sooner than expected, or Powell just affirming that rate cuts are coming at this point would be good, considering the last couple inflation reports have been kind of showing inflation still here, maybe even ramping up in some areas. Then I think you get that breakout in Tesla stock, and I would target around 212. I don't know if I'm going to say the low 220s is possible this week. I think you'd really have to get some good news, which is a lower probability. Again, you need to see Broadcom and Marvel have good earnings. You need to see Powell, add some kind of enthusiasm to the broadening out of our markets. I don't think Powell's going to cause AI stocks to rally or big tech stocks to rally. If anything, Powell's going to cause interest rate sensitive stocks to rally or interest rate sensitive stocks to sell off. So I think Powell could have a larger bullish effect to Tesla stock than a bearish effect, because let's be honest, we started 2024 with the expectation that we're going to get 7 rate cuts this year. That's now down to 3. What is Powell really going to say that is going to crush the interest rate sensitive names even more? I don't know. He would have to say something that's really different than what we heard from the last time Powell spoke. Maybe he does, though. Who knows? I just think Powell's more than likely going to be a positive catalyst than a negative catalyst. I think earnings with Broadcom and Marvel, that could give you a little bit more downside in our markets, and the non-farm payroll report is really a toss-up on Friday. So on the high end, I'm targeting 212, likely to see some resistance around that 50-day moving average. On the low side, about 190. So I think it's pretty equal on a risk to reward basis, but I am expecting a larger move than not this week, and probably a breakout of this channel, which a breakdown would be about 198. You'd break under this downtrending line. Actually, it's about 201 or so pretty close to actually, breaking to the downside right now. And to the upside, that level is going to look like about 207 this week, which is, again, that gap fill that we've seen, that gap down. I guess you'd be filling the gap down from Tesla's last earnings. So I don't really know which way things are going to go, but I am expecting a $10+ move either direction in Tesla stock. Hit that like button as well as subscribe to the channel. Let me know what you think about this information. Out of all of these catalysts, which ones could be more bullish or more bearish? I would love your feedback down below in the comment section. You guys enjoy the rest of your day. If you guys want to come trade some of these earnings, come trade this macro data and these events with us live in real time, link down below in the description of this video, and follow the X account. It is Michael Tyler over there. It's free $99 to do so. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.